Welcome everyone. Thanks for taking some time this morning for joining us. What we're going to be looking at today is the new Raptor trading system and what makes it unique and why you might be interested in using it for your trading efforts. We identified one of the principal needs among traders is their ability to find high probability signals, right? Everybody is always second guessing their signal. Should I take this signal? Should I wait? What should I do? Well, with the Raptor, it makes it easier for you to identify these signals because it actually gives you some early warnings. Now, I'm going to go into the Raptor components here in a little bit, but first allow me to show you how some of this signal generation works. First off, when you start to get a signal building, you're going to get an audio alert, so your attention will be drawn to that particular chart. You're also going to get a pre-signal warning that prints in the top right corner of the screen. You can see this particular signal is a crossover buy signal, which is one of our high probability signals. And you're also going to get warning dots to tell you that a signal is forming, and then when the signal is complete, you're going to get a triangle and a hash mark. So you get lots of warning that a signal is starting to build. You know what type of signal to expect, and then when the signal is complete, you get your entry parameters, and then it's just a matter of decision making, whether you're going to take the signal, how you're going to structure the trade, and so on. So this is what we call the number one signal. This is our number one high probability signal, or the first high probability signal. It's an early warning of the crossover buy signal, and it is a high probability signal. And you can see that it actually had some decent follow through to it, and this is typical for many of the Raptor signals, many of the high probability signals. The second high probability signal is what we call a soft edge buy or a soft edge sell signal. And this is actually our counter trend signal. A lot of people are surprised to learn that we actually have counter trend signals. Everybody believes that you should only stay with trend, and that's true. You should stay with the trend as long as possible. But very often when you do get a reversal signal, it can be a very pronounced reversal, especially if the conditions are right, which they have to be for a soft edge buy or a soft edge sell signal to form. And you can see on the screen there how we printed a number 2 where the arrow is located. That confirms that we had that soft edge buy signal, which is the counter trend signal. And you can see that, once again, we had a reasonable amount of follow-through. This particular chart doesn't show it, but the market actually did drift a little bit higher than that as well. So there's 2 signals. We also have a third high probability signal, which is a trend continuation signal. This is called the hard edge bounce. So we'll get a hard edge buy or a hard edge sell whenever the market encounters the hard edge of the trading band, which I will explain to you in a moment. We get this signal when the market bounces out of there, and that, again, is one of our high probability signals, a signal that you can take with a great deal of confidence. And when you get the follow through, you can see here the number 3 signal has printed, and the market fell off nicely. So bear with me here a moment. I'm going to move to the charts now. And
you know, Eric?
Yes?
Yeah, before you dive in, this is probably a good opportunity, maybe make one of those charts just bigger for a second, just to do a quick overview for the newbies, in the room on just what the visuals are that we're looking at here. And, because obviously we're going to get into the signals themselves, but, what makes up the Raptor chart in general.
Yes. So the Raptor is unique in that it takes components of all the DTS systems. That's the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader, and it blends it all into one trading system. So this tool that you have right here has scalp, swing trading, and trend trading signal parameters all built into one trading system. The Raptor bars print blue or magenta, depending on whether the market has a more bullish or bearish bias. And yes, if you don't like the blue and the pink, you can change the colors. The bars are the indicator warehouse mean Renko bars. The mean Renko bar is a unique blend of a Renko bar and a candlestick bar. So it has all the power of a range style bar for helping you see where the market is finding support or where it's showing resistance, but it also gives you that added sensitivity of a candlestick. So you can actually see when the sellers are losing their grip on the market or when the buyers are starting to falter. There's also the clouds, the dual clouds on the Raptor. A lot of people think these are Ichimoku clouds. Yes, I know they look like them. No, they are not. Again, these are unique to the Raptor programming. They're actually borrowed from the Eagle Trend Trader. But whereas the Eagle only has one cloud, the Raptor has two clouds. These clouds give us our directional bias, as well as helping produce some of the signals. Down below here, we also have the Eagle Trend Trader, all programmed into the Raptor filter. This is an excellent momentum type filter. You can usually see when the market momentum starts to wane or shift. Here you can see there was a large blue block indicating that there was a lot of bullish pressure, and then all of a sudden we get some selling pressure, and you can see that the buying pressure came back but not nearly as strong, and then it starts to flip over as we start to get more selling versus the buying. So when you see this type of thing happen, a lot of times you can anticipate a trend reversal. Sometimes you can anticipate a sideways market. You'll see the bar colors starting to print a lot of yellow bars. The yellow bars are neutral. So when we get a lot of yellow bars printing at more or less the same price level, we get our filter breaking up. That gives us an early warning that perhaps we're entering a sideways market. And it's best to either wait for the market to get out of that sideways range or just trade it differently. As I mentioned before, the signals all develop with a warning dot along with an audio alert. When the signal is complete, you get a triangle and a hash mark that tells you that you have a high probability signal. We would have had the pre-signal print up here that it was a cloud crossover forming. And so there's a signal that you could have taken just shortly before the room opened, actually, and you can see that the market fell off nicely or pushed higher to our high probability profit target. Here, just out of the open, we had a sell signal, and the market retreated down here before turning. This is our counter trend signal that actually developed about an hour before the market opened this morning. And you can see it too had some decent follow through. So this on the NASDAQ, and you can see we had some decent quality signals here this morning, something that you could have taken advantage of.
Eric, I'm going to step in real quick, real fast. All right, so if you're new to trading, I'm going to comment on that for a second, and then if you're just new to us, we'll comment on that in a second. If you're new to trading, then some of the subtleties that I'm about to mention simply won't have as much of an impact because you probably haven't felt the pain yet of what else is out there, or even just you trying to do things on your own. But so either you can hear what I'm about to say and save yourself, $10 or $20,000 of searching around for other stuff, or you can appreciate what I say now, and that'll be great. If you've been trading for a while, then you've probably already been through the analysis paralysis phase, in which you throw basically a spaghetti bowl's worth of indicators on your chart, all thinking that each one is going to give you additional insight and information into the market, which in turn actually just is actually confusing and impossible to make a decision on. And so one of the things that we're known for in the market is simply the design of the software. It's true that the diversification approach is absolutely innovative, and it's one of our claims to fame. But the other is just the ease of use. So what you see on this chart, that's it, right? You don't have to add any Bollinger Bands or moving averages or Illuminati lines or whatever. It's been specifically designed, much like an iPhone, to be subtle on the surface and complex below. And so if you think of trading software as a tool or tools, it's the tools that are easy to use that allow you to actually do your magic. If you just get caught up on using the tool, it kind of reverses the purpose of it, right? Tools are not there to learn, the tool's there to help you do your job. And so that's important, because you'll see that it's just one of our design, culture, is to keep things as simple and easy to use on the surface. What goes on behind the scenes is actually less relevant. Yeah, I think that's it. Thanks.
Okay. I was going to...
Oh, I know. I'm sorry. One more thing, Eric. I apologize. Yeah. I knew I had it in my head. The other thing is, this system is designed, to be flexible. In other words, if you're new, great. See those 1, 2, 3 little white boxes? That's where I would focus your trading. Those are the highest probability signals. However, once you get comfortable with that level of trading, the system will still grow with you. So you'll see other signals on this chart. They're simply more advanced signals, and by that I mean there's more subjectivity in them. That doesn't, that's not a good or bad. It's just simply when you are better at reading the markets, in other words, you've programmed your brain to start seeing patterns automatically, the system will still grow with you and allow you to take more trades when and if you want to at your discretion. But for now, if you're new, just focus on the 1, 2, 3 trades. Now I'm done.
That's all right. You can interrupt anytime. And that goes for everybody in the audience as well. If you have questions, please don't be shy. Ask away. All right. So, yeah, Adam already touched on the signals. And as he mentioned, you can see there are other signals that are printing, but the system highlights the high probability signals for you to help make your decision making easier. So you're not second guessing yourself all the time. Should I take this trade? Shouldn't I take this trade? All right, so you're not second guessing yourself anymore. You get the signal. How do you still go about protecting yourself? Well, that's where this little beauty here on the right-hand side comes in. This is called the Trade Manager. And this tool right here is a very, very sophisticated piece of trading software. In fact, I mention all the time that when Adam told me he intended to have this done, I said, I don't think you can make that work on a PC. I don't think you can make that work on a home computer, because this is the kind of stuff you normally only see on Wall Street, this management power. The Trade Manager has two components to it. The bottom half down here is what we refer to as the Risk Manager component. And then this middle section through here, which we refer to as the Profit Manager. Let me start with the Risk Manager component. This has two modes. There is a manual mode and a risk percent mode. What the risk percent mode means, it's going to cap your risk at this value right here. Currently, I have it set at 2% of my trading capital. That means when I use the Trade Manager to set up my trade, no matter where I place my stop, I will only have 2% of my capital at risk. So whether I choose to place a tight stop or a loose stop, my risk is always capped at 2%. Now you can see there's a little bit of rounding going on here, but you'll notice that in this trade, I have 3 contracts in play. If I choose to run a more liberal stop, say something down here, the risk amount doesn't really change, but now I only have 1 contract in play. Now people look at this and they say, whoa, why would you risk $300 to make $100 in profit? It's because even though you've been told your risk reward has to be 2 to 1 or 3 to 1, most people do their risk reward ratios incorrectly. And in the trading room, I'll show you how to do a proper risk reward ratio. But for now, what we want to concentrate on is we want to concentrate on increasing the probability that our trade will be successful. DTS or RTS, the Raptor system, is a very good system at picking up market momentum. But let's say you took this trade here. Every once in a while, you may see the market back up on you a couple of ticks. So if you are like most people, and you jam your stop in ultra tight, you're only going to get stopped out before the market even has a chance to get down to your profit target. So if you know that the risk amount is going to be the same, whether you have a tight stop or a more reasonable stop, why would you not go with the more reasonable stop and give yourself a chance to hit your profit target? Most people end up strangling their trades because they're afraid to lose money. They've been told, cut your losses short, let your profits run. So to them, that means I got to jam my stop in ultra tight because I don't want to lose too much money. Well, what they end up doing is they end up strangling their trades, and they lose money before they even have a chance to make money. It's a very important concept, and one that most traders never get their heads wrapped around, that you have to give your trade a reasonable amount of room so that you can get a chance to get to your profit target. After all, your stop loss is not a loss unless it gets hit, right? If you jam your stop loss in so tight that you get stopped out all the time, well, that's a loss. But if your stop loss never gets hit, it's not a loss, is it? I have a very good trading friend who likes to run very tight stops, and I mean very tight. He will run, and this is in the bond market where you're trading at $31.25 a tick, he'll run a $50 stop loss. That's less than 2 ticks away. And he will routinely take 4 or 5 or 6 stop outs before he catches a bigger move. And fortunately for him, he'll recover his loss and then some. But I said to him, why don't you just run a $300 loss, stop loss? If you're going to get stopped out 5 or 6 times, why not just run a $300 stop loss? You may not get stopped out at all. So not only is he incurring, 5 or 6 losses in a row, but he's incurring commissions on every trade. He's incurring fees on every trade. Whereas if he had only placed a $300 stop loss, the end result would have been the same, and he may not even have been tagged. He may have gone up and hit his profit target before his stop loss was even engaged. So that's something that a lot of traders never wrap their heads around, and I encourage you to give it some serious thought, that don't strangle your trades. If you take nothing else away with you, but don't strangle your trades. Give your trades a reasonable amount of room, and don't risk more than you can afford to lose. That's where you're going to run into trouble, when you're risking far more money than you can afford to lose. So the trade manager prevents that from happening by always capping your risk at a preset amount. Now, there is a manual mode. Sometimes the conditions are such that You look at the trade and you say, oh, I'm not really sure. I'm just going to throw a single on it, or whatever quantity. You can set this quantity for any value you like. But let's say you just want to throw a single on it, see what happens. Okay, there you go. You've got a single contract. But the risk percent mode, like I said, is going to literally save your account. It's going to keep you from blowing yourself up. So that's part one of the trade manager. Part two is the profit manager component. This is where we have 16 different stop strategies for you to choose from, all of them fully customizable. This is what they look like on your chart, these blue dots. And what happens is the trade manager will take your trade and actually manage it according to these blue dots. So when the market starts to move in your direction, your stops will automatically roll as the stop strategy demands. So what this enables you to do, well, first off, a lot of people have no idea how they're going to manage a trade, so this solves that problem for them. And secondly, it puts this trade now on autopilot. So you can go look at another opportunity. Let's say the Raptor is alerting you to an opportunity in gold or crude oil or the euro or the British pound or whatever. This trade is now on autopilot. You can put it on the shelf and you can go look at another signal. See right here on the E-mini S&P now, we've got the warning that we've got a crossover buy forming. And we can set up for our trade. Let's say we're going to set it up this way. And we can submit the order. Now we have an active order. We had plenty of warning. Oh, my profit target's a little far away, but I'll adjust that if we get filled. All right, so that's how it works. We get you can see here we had the counter trend signal. So we could have already been long this market. Now we're getting the trend change signal, the crossover buy. And it looks as though we might see the E-mini try to press a little bit higher still. Back to the trade manager, just real quick. So we've got all these stop strategies. As I said, they are all customizable. If you would like it to be a little bit more conservative or perhaps a little bit more aggressive, you can make these changes. You can change stop strategies on the fly. So if you don't like the way Trade Manager is managing via this strategy, you can switch to another strategy, make it less or more aggressive. Let's say we want to go with a swing low, and we want to go a couple ticks off of the last swing low. Well, that's actually right here.
I mean, this is a nifty. This is one of those subtle things that, again, really needs to be called out. Because oftentimes you'll hear the secret to success is how you manage your trade, not the entry signal you take. And so I love this feature because you can start off with a trailing strategy that, let's say, gives your trade plenty of room to breathe. But as market conditions can change, that's no better reason to make a decision than based on market conditions as opposed to some arbitrary idea. You can actually change your trailing strategy so that you now still have the technology in play to manage it for you. However, it's a much tighter strategy because you're starting to protect more of your profit based on what's going on in the market. I will tell you that of all the software that we sell, this trade manager piece is the one that I always get the phone call 2 to 3 months after the purchase with, why didn't you tell me about this 5 years ago? And I don't know why the retail trading space does not pay attention to protecting your account as the most paramount part of the trading equation. Because if you go over on the institutional side, that's all they talk about. But needless to say, I recognize this stuff's not sexy, maybe even a little confusing, but it is by far critical for a success in your trading system. And
I suppose, Adam, it's also because it's not easy to do. a lot of money management can be very complicated. Figuring out 2% of your capital, figuring out where your stop should go, figuring out where you're going to trail and how far back you're going to trail, especially if you're going to use a strategy, say like the super trend strategy, which is a pretty sophisticated ATR balanced out with a moving average. So if you're going to do these calculations on the fly, it's going to be pretty difficult to do. The trade manager, of course, does all this for you. So it really simplifies it. But, going back to your question, why doesn't it appeal to the retail? And I think that's it, because trade management can be complicated. Entry signals, those are sexy, those are flashy, those are something that everybody can play with. Let's tweak our stochastic, let's tweak our Bollinger Bands, and let's see how that performs. But successful trading is like a three-legged stool. If you only have a good entry signal, you only have one leg of your stool. And yeah, you may be able to balance yourself for a little while, but the reason you're losing money is not because of your entry signal. The reason you're losing money is because you don't have the other two legs of your chair. So yes, a good entry signal is important. You need a high quality signal, something that you can trust. But you also need to be able to balance that with correct money management and with correct trade management. Now you've got a very stable platform to build from. So what the Raptor and the Trade Manager does for you is it gives you the complete package. It gives you all the pieces to the puzzle that you need. And the Raptor, it's a sophisticated piece of software. If, I dealt with a fellow, I did some coaching with a fellow. He just loved Bollinger Bands. He had to have them on his chart. I said, go ahead, put Bollinger Bands on your chart. The Raptor is still strong enough that you can use Bollinger Bands, but here's the caveat. Does this help you make a decision? If this helps you make a decision, then by all means, go ahead, use it. If it doesn't, get rid of it, because you don't need it. It's not going to, it's only going to cloud your decision making. Henry Ford, the car manufacturer, he was famous not only for developing the automobile and the production line, but also because he was intensely stubborn. But he was that way because once he made a decision, he stuck to it. And a lot of people said that was his greatest strength, the ability to make a decision and stick with it. Well, that's what we're giving you here. We're giving you the ability to make a decision. We're giving you the ability to stay with it, because you can take this trade now knowing full well if, for whatever unlikely reason, the market goes up and then, makes a beeline lower and stops you out, you still have not lost more than you can afford. Okay, maybe it was a bad decision for whatever reason, the market tanked. I should mention, it's extremely unlikely that the market would reverse on you without giving you at least one chance to adjust your trade. But you have quite literally everything you need here. You've got the high probability signal, you've got a way to protect yourself, and you have a way to manage your trade. So, that's all the pieces to the trading puzzle right there. So if you've been struggling as a trader, trying to figure out where I should get in, where I should place my stops, how I should manage my trade, well, the Raptor trading system answers all those questions for you. So I hope that answers your questions. If you have any questions, please feel free to type away in the chat window. Otherwise, I do have here a slide for you. I think Adam's got a special for you for attending today.
Yeah, hang on. I think I probably just, did I drop this in the window correctly? Yes. So you should see, so obviously you see it here on the screen. You can copy that down. We made it as easy as possible, right? /Raptor.2-2. I also put it in the question answer chat box. I just responded to Clayton and put the link in there, but sent to everybody. So hopefully you all can see that link also. In fact, do me a favor. If you would just type a Y that you can see that link so I can make sure you got it. Okay, good. And I put another link in there also just while Eric was talking. That points out to, I forgot exactly what it's called. I think it's like Money Management Calculator. But what it does is it does a really good job of showing the power and, dare I say it, necessity of position sizing and, also known as risk management in your trading, and why it will impact your results, quite frankly, exponentially. And so, it's just mathematics at the end of the day. Okay, well, while we have a little bit more time left, happy to field any questions. If I don't get to all of your questions, okay, hang on one second. Somebody just said maybe the link is old. Give me 1 second and I just want to check the link real fast. Stand by. Yeah, okay, I'll fix the one in the slide. There you go, right? Use the one that's in the room that I put in the chat box, which would be /Raptor-offer. And then after we finish the session, I'll go fix the one that's actually in the slide that's just taking a minute or two. But if you use the /Raptor-offer, you should see everything that's involved in what it costs to actually invest in the system, including all the education that comes with it and free upgrades, money back guarantee. That's a first for us. And you can see the syllabus for what Eric's doing in the trade room for teaching how to use these tools. And, again, you'll also, if you have any questions, it's one of the things we're known for, again, in the industry. We actually pick up the phone and talk. So let me put my contact information in here also. Stand by. All right, I put that in the answer question window also. All right, anything else while we're on the phone, so to speak? Otherwise, I'll hang up and get that link fixed ASAP. And you have the one that I put in the chat box.
And if none of that works, just email Adam.
Yes, it's the joys of technology.
Yeah, it's great when it works.
Yeah, that's and enough said, right?
Yeah.
Okay, folks, I'm all about brevity, so there's no reason to waste anybody's time. It looks like we covered everything in the presentation, and I privately answered some questions behind the scenes, so we're solid. Again, feel free to reach out to me if you need to talk to Eric more on the trading side of things, like more explanation of what the signals mean, etc. He's available too, and we are definitely here to assist you now and into the future. So thanks for joining us today.
All right, we'll talk to you guys soon. Bye for now.